Coming up today on the Prosperity Nation podcast.
Again, it's like listen to who you're taking advice from, because having the control over the books and understanding all the moving parts and pieces gives us a unique point of view where we know if you take something from here, what it's going to affect over there. Welcome to the Prosperity Nation podcast. I'm Angie.
And I'm Elise.
And we're so glad you're here. No, we're really glad that you keep sticking around because we know that we're a little quirky.
Yep.
We're not your typical advisors. We are very top credentialed, lots of degrees and all that kind of stuff. But hey, we're humans.
Exactly.
At least Elise is.
Am I? I'm just kidding.
I don't know. Sometimes I wonder, Elise.
Right. I know.
Anyway, we're in for a good show today. We have lots to talk about. We're going to talk about one of our favorite things to talk about, which is money found. We have found millions of dollars since we started tracking it. We track when we find money that we can either get back on the tax returns, missing accounts that we find, when someone does bad accounting in the middle of a divorce, we fix it up so they don't have to pay the spouse too much.
Or anytime, really.
Yeah.
Not just in the middle of a divorce.
That's true. I know you found money just because you're like, hey, you closed this account, but they never gave you your refund back.
That's happened
where's
a few
your
times.
refund?
Or transferred accounts and like property managers. That was a big one.
Yeah.
It's a few $100, but it adds up,
Yeah. Yeah. Well, this last month we found hundreds of thousands of dollars. We found some pretty big bucks recently. And we thought it would be very selfish of us if we didn't tell you about it and we didn't share. How do we keep finding all these millions? We have over $16 million so far since we started tracking it in the last couple of years, and more to come. And this money comes from various sources, but bottom line, hands down, if your books are a mess, your taxes are going to be a mess, and you're not going to have good advice. Your advisors are not going to be able to advise you well because they're looking at data that's not true data. That's the bottom line. And that's why I know, Elise, you're such an important aspect of what you do for the clients by making sure and holding that line. Clean books, period. Get your personal stuff out of the business. Get your business stuff straightened, cleaned up, organized, and then even getting your personal stuff in order. What do you find?
What do I find? Well, it's just sometimes chaos.
Yeah. That's what you find when they first come in.
That's what I find. Yeah. I mean.
Oh, can I add, Elise? And it always comes with, but I love my bookkeeper. She's doing a great job for me.
I mean, bookkeepers are very important. And I understand that. I think for me, it's when you have people, they're like, no, I don't want to pay for someone else to do it. It can't be that hard. And I feel like a lot of those, I don't even know if they're the business owners or the husbands or wives or friends of the business owner, that I feel like kind of discredit the profession, because there is a lot into like actual bookkeeping, and it is way more than just clicking a button, because unfortunately and fortunately, like softwares like QuickBooks have made it so automated that you don't need to know the other side
that's true.
of the transaction. Like, because accounting is two sides, and you don't need to know the other side of it. So people don't understand when you're dealing with something that might be a little more technical, what to do. Anyway, not trying to bash bookkeepers.
Yeah, I gotcha. No, we love them.
We do. Yeah. But we, a lot of times we do get clients that have had not maybe the most accounting-wise skilled bookkeepers. So we have to clean up a bit. There's stuff just in the wrong spot,
if I could jump in, that's why we made a policy now.
Yeah.
We don't take on clients and let the clients have their own bookkeeper anymore. We end up spending so much extra time either cleaning up or trying to explain things to the bookkeeper, and it's just way faster if we just get it streamlined, get it all set up, and get it under control very quickly. We bring people in, and our purpose here is to help people find prosperity, and the only way we can do that is to help them directing their money into important goals for what actually will bring them prosperity. And there's no way we can do that if we can't see what's going on and it's not getting the right tax strategies in place. So it takes us some time when they first come in to get everything cleaned up, and it can take 3 months, it can take a year and a half, but depending on the chaos and the participation with the client and whatnot. But as soon as we start finding money for them, they start perking up real quick.
Yeah. And once everything's clean, then you can actually start to see what's actually happening. And that's when, some clients, this is more on the personal book side, but there's been some times where clients didn't even know they had accounts. And the only way it was really brought to their attention is because I saw transfers going in or out to, a certain bank. And I'm like, what is this bank? And they're like, oh, wow, I forgot about that account. There was one client who I asked them about this, and they looked and they totally forgot they had this bank account. And I think there was like over $100,000 sitting there.
Yeah.
It's
I
wild.
That was last year.
Yeah. So it's also a way, like, people have so much money chaos going everywhere, especially because it's so easy to just move money around now, that they don't realize how easy it is to lose sight of, like, these automatic transfers you just have coming out of your bank account every month, but you don't really know. I mean, I put together a personal financial statement for another client recently, and I don't think they realized how many different accounts they actually had with various brokerage firms, retirement accounts. It took a long time. They're like, oh, wait, no, I have another one. And then, I'd send the final. They're like, oh, wait, no, I think there's another one. And we just kept adding to the pile of accounts. And so it's so easy to get this information lost if you don't actually have it organized.
It's true. And it's hard to confront it all because nobody wants to look at their bank statements nowadays. First of all, who gets bank statements anyway? I mean, I don't get bank statements.
I don't. No. I mean, I get an email saying they're ready.
Yeah.
I don't look at it. I just delete.
Exactly. We all look at our stuff on our phones and whatnot, and it's convenient to just shift and move money around, but nobody's paying attention. There's nobody watching the pot, and that's what we get to do. We come in, and that's why people love us so much, because you dive into the details, you get it organized, and we can actually see what's really going on. And a conversation that came up, okay, let's getting back to our money found. So this is how we find money. We have a lot of tax strategies that we end up changing or fixing or finding for the clients as we do this. And we also have going back and amending returns when things were just mixed. But we can't even find any of that if we don't know what's going on in the books. And I'm just hounding in this message right now that if you want good advice from your advisors, they got to have something good to look at. And it comes from clean books. Now, nobody wants to do it. That's why we do. That's what we do. So last week we were having a conversation with a client, and we were going over, well, I'll let you tell the story. We're going over their fundamental onboarding stuff and getting their starting stats and getting organized. And then he popped up and said what?
Yeah, he said he took out a loan a few years ago, and it was for the business, 100%. It was like essentially a startup loan, I think, from my understanding. And he was paying, I think, like $10,000, $11,000 a year in interest. And he's never, I don't know how, somehow that got, I know, I just learned this actually today. He has the payments coming from a different bank account. That bank account was never nor the loan never connected to QuickBooks. So the previous bookkeeper would have had no idea that this even existed. Therefore, when the books were sent to the CPA to do the taxes, they wouldn't have known either, unless the client sent the tax forms, which I don't know why he didn't. Well, I guess you don't get well, sometimes you do. I don't know. No, it wasn't.
That's the bottom line.
No one knew about it.
I think it was like triple that amount actually of interest, because it was a very significant loan. I was thinking about it was a $750,000 loan. You're talking about a lot of interest that's not getting deducted. And when you're in a 50% tax bracket, that's huge. That's huge. That's real cash in your pocket. And how did we find it? Because we started asking questions. And we started listing, what are your assets? What are your assets? What are your debts? What else do you have? What else do you have? We always start with our starting stats, which is basically like, what do you think you have? And we love to do that, because by the time we get done all the cleanup and we get to the end, we compare it and say, here's what you thought. Here's what's real. And everybody's always like shocked and relaxed and pleased. It's like so nice to see all their stuff in order,
Yeah. Well, here's what's interesting about this particular client, because I actually had a call with this client today to go over some other things. And they even commented, like, how come my CPA didn't know about this, or why was this never written off? Like, they deal with my business stuff. And I just told them, I said, look, a lot of times CPAs are really busy. There's a shortage. So they don't have the time to really get on the phone and dive in like we do with their clients. And that's really the only way, I didn't tell this part to them, but it's really the only way of knowing if there are things omitted, because you're not going to see that from the books. Like, if you just have no idea.
Yeah. Well, and it comes because we take that personal point of view. We are called personal CFOs because we take the position that behind every business is a person. Now, sometimes we put their personal books in QuickBooks and we really control where all the money, or we can really see where all the money's going. Sometimes they don't want to bother with that. And so we'll just put it together in an Excel or in a financial planning software or something like that. But even if we do nothing, us having that conversation and that point of view, that always asks the question, well, where'd that money go? What'd you do with it? Where'd that money go? What'd you do with it? It gets the awareness built up. It increases their awareness for, where did all my money go? I made that much last year. Where did it all go? And I'm like, that's a great question. Where did it all go? And then we dive deeper. But we can't even do that till we have it all cleaned up in the first place and get their business all in order and get their taxes straightened out. So, in another point of view on that is, I love this Money Found story where we're actually saving almost $30,000 for a client because he came to us and he was so upset because he had gotten advice in the past that he was able to do a defined benefit plan on his S-Corp or his corporation, which is totally a great strategy for someone to put a lot more money away into a retirement account. But then nobody was paying attention to the actual requirements of that, and they didn't take enough payroll. He didn't take enough payroll. And when he didn't take enough payroll, it limited his contribution into this to a very small amount. He probably could have just done a SEP IRA and put more in, in the way it was done.
It was honestly a pretty easy fix. It shouldn't have been done. I mean, we shouldn't have needed to do it is kind of the part that sucks, but that's kind of what we're here for.
Well, and even, exactly. But, what's interesting is that even if somebody had missed it, he realized that it happened. And the attitude was like, oh, so bummed that
nothing
happened.
Can be done. Right.
Right. Nothing can be done. Apathetic. I'm like, wait a minute, something can be done about this. We can do something about this. And he perked up and whatnot. He's like, yeah, I want to do it. Let's do it. And because we know the rules for how those work, we know how to work with and understand the third-party administrator on those accounts. We know the tax due dates that we're dealing with. We know what can be amended, what can't, what's legit, what's not legit. Because we don't do anything that's not legit. We're not here doing shady things. We don't want you, shoving stuff in your business thinking you're going to get a write-off because we're going to just take it out. Like, no, we're legit here. So, but that's how we find these things, because when it's clear and it's not muddled together with stuff that someone told you should write off or whatever, then we actually can give you real advice and get things really cleaned up. And in that case, he was able to put another $60,000 into his defined benefit plan and take another $30,000 tax deduction.
Yep. Yeah. And I think, what's sad too is even the third party was like, yeah, that sucks. Here's your new amount. Like it was just like, okay, nothing we can do. So.
Yeah. Yeah. And I said a $30,000 tax deduction. I meant $30,000 tax back. Because he'll get another $60,000 deduction. He's 50% tax bracket. That's a lot of money. You live here in California and you're making good money. You're in a 50% or higher tax bracket. So every penny matters, on these things. So we look for the things that'll save you $1,000. We look for things that'll save you $10,000, $100,000, whatever we can do. But we certainly look for mistakes or ways we can recapture strategies. If it's too late, it's too late. We can't do anything about it. But we're going to tell you that. We're going to say sorry. Wish you found us last year, but
I hate
I'm not going to make you feel bad about that.
I hate that though. That's like the one comment from clients that makes me just like, oh, when they're like, oh, I wish I would have met you sooner. It's very like pleasant because I'm like, thank you, but at the same time, it sucks because
I know
we probably could have saved them so much more money had that been the case.
My worst story for that is when a client came to us after they sold their practice and they just were just so adamant that their bookkeeper was fine and knew what they were doing. And they paid $7 million, but another client in almost an exact same situation paid $1 million in taxes. It's like, we could have done something about it. Don't try to do it yourself. And please don't take tax advice from your bookkeeper. They're not trained. Love them. Let them do bookkeeping. But don't let them do tax planning, tax strategy. That's not their job. That's our job,
Exactly.
But hey, you know how I found almost $220,000? Let me tell you this story real quick.
No.
Actually, you do know.
Don't.
But that's okay.
I'm like, who is
You probably
this?
just forgot. I'm kidding. No, this was one that I know. It wasn't because I had you clean the books up. That's usually where we find the money is when you do all the management of it. But this is one I did. I get no credit.
Look at you.
So I've been working, we have clients who part of the way we do save them money when they sell their businesses and whatnot is we help them set up some advanced tax strategies with deferred sales trusts and some fancy things like that. But in this case, we're helping them manage it with their trustees and doing tax planning and cash planning. And one of the situations was a good idea to borrow the money from the trust in order to pay off a different loan and then pay that back in a short-term loan. So totally legit strategy, everything good with that. And this loan was about $600,000. And so we've been planning all year for this, to happen this way. And then as I was looking through and I was following up and I'm like, where's that loan doc? We wanted this all to be legit. All of a sudden they're like, that's not a loan. That was a distribution. Well, the distributions in this case are 100% taxable. And so I'm like, who decided that? Like I've been in this planning the whole time with the client as their personal CFO. And all of a sudden, the trustee, without me on the call, and the client had, done whatever they did. And so we were able to get it fixed and get it legit and basically eradicate about $220,000 of tax liability, not counting all of the penalties and everything else they were going to pay. Now they're going to have to pay tax on that money in the future, but not all this year.
That's crazy.
When we're trying to plan it. It's like, listen to who you're taking advice from because, having the control over the books and control of all the cash flows and understanding all the moving parts and pieces gives us a unique point of view where we know if you take something from here, what it's going to affect over there.
Yeah, that's a good point. Even with investments too, even if we don't manage someone's investments directly, we still have the insight and ability to see that picture as well. And I think that's a unique skill set.
It's true. And that's why we opened our investment firm, because we're like, you know what? Now we're competing with investment advisors who have different ideas and strategies and they're only seeing one point of view. And we're like, it's really hard because we're working on the strategy toward your goals. And then we've got somebody else advising towards something different. And don't understand the taxes and don't understand all the cash movement that we're trying to help you figure out. And so we're like, no, we just need to bring it all in-house now. Right. So now we have our investment firm, we've got our insurance firm, we've got our CPA firm, we've got our coaching firm that brings in, so you have that goal specialist, like who's right on it with your life goals, and being able to pull the piece together. Why? Why do we care? Because all that money that we find, we want in your goals. Yeah. We don't want it to the IRS or to wherever you're going to give it to. Give it to where you want to give it to. Put it in your goals.
Exactly.
So anyway, we have more stories. We have lots more money found stories. We love to share them. We actually keep very well track of it. We keep records and stats, and we have it on our website. And, we send our clients reports of all the money strategies and money found we did from the year because we love it. We love to get that money back into our clients' pockets. We want to get it back into your pockets too. But we also just want to hear your stories. Did you have bad experiences with losing money because of bad advice? Or maybe you have great stories and you've got another advisor out there you're working with that you love that saved you $16 million of taxes. I don't know.
Exactly. I think Riggs has a story though.
Yeah, Riggs. Come on, buddy. Jump on in.
Fortunately, he can't share because he can't speak. But if you'd like to share your stories at prosperitynation.com, go ahead and like and subscribe to our podcast and follow us on our social media accounts.
Awesome. All right. We'll see you next time.
See ya.
Thanks for joining us today. Follow us on social media for the latest episodes, updates, and more. Like and subscribe to videos from us on YouTube and find out more at prosperitynation.com. That's it for now. We'll see you next time on the Prosperity Nation podcast.